Hey everybody, it's Nick Inman, founder of VolumeProfileTrader.com on Sunday, February 3rd, and I'm just going to keep this video very simple, go over the broad market, a few commodities, and the names that we're involved in right now, and then just wrap it up from there. But looking at the S&P, and again, the focus on this is being simple, you can see the day prior to the first of the year, I guess whatever the trading day was, huge up day, but it was on relatively light volume, so not many people took it seriously. And then the following day you had that follow through. Well, then you had that, basically you have the group of investors that think, okay, this market's going higher. We weren't involved because of the fiscal cliff issues. Now we need to get involved because, again, it looks like the trend's moving higher. So they were probably on CNBC, trying to talk down the market, saying, expect a pullback, blah, 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 when in all reality, they were trying to buy any type of weakness in the market. We talked about that, and we were right on this, and now you see a very defined uptrend on the S&P. This is just a 2-hour chart going back to basically the first of the year. And as long as this, generalized channel is not broken, there's really no reason to sell S&P futures or whatever in a longer term time frame. It's just not working. Counter trend has been pretty tough this year. So only recently, which was Wednesday, was really a counter trend move actually, workable, and it actually went. That's the first time I can remember in a while. However, again, as long as the channel remains, then make it easy on yourself and just trade the channel. Similarly on the Nasdaq, one thing we have is, let me zoom out and show you. We have this huge pivot line which just defined massive tops on the Nasdaq, and finally we've broken above that. We have one higher low off of the major low, and so far that's proven to be valid. And then we have this little defined channel here, which has been consolidating for since the first of the year. And what we're seeing is Nasdaq obviously underperforming thanks to Apple, and really that's probably the main one, so it really doesn't matter. But again, what you have here is you have some higher lows, you have some higher highs. However, this top of the channel has been resistant, so you don't want to be buying at the top of the channel, you want to be buying at the bottom. So just keep that in mind. And one tell on this, if Nasdaq's going higher, is you really look at Apple. And I've drawn a few lines here, and it really just defines how I view Apple right now. We've seen, earnings came out, Apple tumbled low 435, and here we are holding this, call it 450 level. Not, without a doubt, it's not anything significantly strong. I don't think it matters until we clear 661 or 62 on a closing basis, and then 465 is the big one on good volume. You want to see good buy volume off of this channel here, and if that's the case, I do think there is a chance for Apple to go up towards 490, 495, maybe 500, and then we'll start with there. That's kind of like my minimum target. But if it does snap back, which is a possibility, 420 or 418 would be my ultimate target short term. In the month of February, something along those lines. So I am watching Apple. If it shows me some buy signal within this range, I'm probably going to go long again. We had the 455, 460 call spreads that ended up doubling last week. That was a good one. So going to try to stick with this now, since we have some definable bottom and a potential upside target on Apple, which we really haven't had in a while. So let's see. Let me go into the VIX really quick. I'll just talk about this. If you want to figure out if the market could potentially be topping out, look for VIX buyers basically sub 1250. If it stays above, call it $13, then you have a reason, okay, maybe this is the bottom end of the range, just kind of keeping it in mind, maybe buying some protection on the S&P, something along those lines. But you're kind of using this last low here as a gauge. Okay, where are the VIX buyers, and where are we trying to go with the volatility? Just to show really quick, remember these 50% retracements on the volatility index really work well. So I'm just going to take a very broad range of them, and this may be kind of hard to see, but I'm just going for these 50% retracements, and I'm drawing lines so you can really see them. So 3 months we got a 50% retrace on the VIX around this 16 to 1660 level. Given where we are in the VIX, and I'm not saying that it's going up to those levels, only if the market gives it a reason to do so, is that a viable target to the long side. But again, you watch this low end of the VIX. The last time we were down here, and this is sometimes as simple as you have to make it, the last time we were down here, we went from 1229 up to 1440. That's a pretty big percentage move, so you want to keep that in mind going into this week. Okay, are we going to bounce again? And if so, you can make some money off the bottom, buying the bottom end of this range and selling the top end if it gives you an entry. Notice we had 3 or 4 straight down days. We had a low here, and then we had a higher low, and then again a higher low with the higher close. Those are kind of buy signals there. It's showing you, okay, the market's trying to go higher. You're getting higher lows in this market. Here's the potential for something to the upside. So just take that for what it's worth, and I just want to kind of point out an opportunity right here. All right, let's go into our stocks. Let me get the right chart. Okay, DuPont. This bought at 45.90, just kind of, or was trailing now. I got out of the position on Friday. I don't know the exact exit price, but it was okay relative to where we closed. But this could move higher. However, the 200-day moving average is right around these levels. All right, Wells Fargo. This name has really just been a pain in my side. I've been looking for a little bit of performance here, and I've just been completely wrong. Trying to be long Wells Fargo relative to something like Goldman Sachs. So it's no fun to underperform in that aspect, considering how well financials are going. But you know what? I'm just with time, this thing just continues to go sideways. Maybe that's brewing for a move potentially to the upside. Again, it's only been right to be a major seller around 36, 35 or so. So maybe we get up and test those levels where you may have to take some profits. But hopefully this channel lasts. One thing to keep in mind, and you'll see more development on this coming week, but you have some potential lower highs here. I wouldn't put any too much into this yet. But if we start to really roll over here, then that may be a reason to be concerned and get out of this name and maybe try again. Just keep our eye on it, but take the risk off. All right. GLD, trading in a little channel here. We're trending lower since September. Trailing lower. We have a pretty defined channel where it's been right to be an ultimate buyer and a seller. But one thing I do see is some higher lows here. We're coming to an apex in that standpoint. So keep your eye on this. 163 on GLD and 160 or so. That's your squeeze right there. And from there, whether you go higher or lower, if you go lower, I'd be looking for 155 or so. If you're going higher, maybe up to 165, 168 to start, and then, we'll kind of go from there. But maybe the better way to look at it is on gold futures. All right. Sorry about that. Okay, we have our major low. I'm just going to draw it across, and we have some higher lows. So let's connect these lows here. and see what it kind of looks like, and where it's been right to be a seller. It's been right to be a seller here. We have some lower highs. That's what we want to keep an eye out for. It's really got to clear 1685 on the upside in order for buyers to really, potentially get excited about this because of the higher lows. Maybe shorts start to cover, and it spurs a little rally to the upside. We'll have to wait and see. No need to overload on gold, whether it's to the upside or the downside, because it's showing you it's in consolidation. There's no winner or loser right now as far as a longer term trend, but or I should say the next trend in gold, but it's coming, and that's, be patient and you'll get your opportunity. Microsoft, I think this continues to move higher actually. We're seeing now a higher low here. As long as 27.5 kind of holds, then I think we're good to try to look at higher prices. 28.65 is my next target. So we'll wait to see if we can get there. But this overall, you're getting higher lows. You have a nice little base here, and we have a good cost basis. So let's just trail our stop and kind of go from there. As far as a stop that you want to use, you can use 27.44 on a closing hourly basis. So what that means is if Microsoft closes under 27.43, 27.44, go ahead, for an hour, that 1 hour bar closes below that level, go ahead and close out the trade and, enjoy the profits, because this has been a pretty good one despite the fact that Microsoft is generally looked at as a slow mover. American Electric, just kind of continue to ride this thing. I'm looking out for it. We actually have pretty good gains here. 43.80 or so is where we're involved. I'm just speculating that, maybe we're at a top here. So we need to keep that in mind. We'll be patient about it. There's no need to rush. This is a relatively slow mover. But again, if the sellers start to come in and this thing doesn't continue to drift higher, then we'll go ahead and get out of this position as well, or at least scale down. All right, Freeport, this is the last name I want to mention tonight. And what we're seeing here is some pretty good, potential candidate for a trade here. It looks like a decent risk reward if we line this up, and I'm doing that for you right now. All right, so what I'm looking at here is about $35. That's kind of my pivot here. You can see it's done a fairly good job at defining the the midpoint of this little trading range. From here, I'm looking for this to be support and a move up to to try and close this gap really. If I zoom out, the ultimate target would probably be 38.18, 38.20ish. So basically anything above 38 would be a good target. So say you buy at 35.5 or so, 35.75. You're looking at a trade that could potentially go up $2.50, and you're only risking 75-80 cents to do so. And I don't think that's a bad risk reward, but given where we're at right now in Freeport, I think you try and wait for a pullback down to 35 to see if it bounces again. But then again, if it does start to break above 35.95, if it closes above this bar, maybe you want to start to scale into Freeport, or maybe you want to take a speculative position right here, right now, and be okay if it pulls back here, or be okay if it just flounders around or whatever it does. Whatever it is, define your risk. You don't have to try to hit a home run. Just put on a good trade, let it work for you, and kind of go from there. So it all kind of ends with, if this channel is to persist, then you want to go ahead and buy the weakness on stocks. Eventually, this channel is going to end, and you're going to see some type of correction. It's guaranteed to happen at some point. We just don't know when. So we trade what's in front of us, which is a gradual upsloping market where it's not doing a whole lot during the day in terms of vertical movement. So anyways, take care. Have a great week. enjoy the Super Bowl, and I'll talk to you next time.